Hey, what's up, everyone? What's going on? Money Multiplier, BYOB, Private Money Club family. We're here for you today. It's what is today? June 11th, and summer's already here. Hopefully, having a good time with summer. I know my son's been off school now into his second week. It's been a fun start to summer. I know up in New York, Sean, you guys are still in school for a few more weeks, right? The kids.
Yeah, probably 2 more weeks.
Wow. Yeah. Well, hopefully you're enjoying if your kids are out. If not, then that. But we're here answering all your questions. So get your questions in about infinite banking, real estate investing. We had a wealth webinar earlier. A lot of really good questions coming in. A lot of good communication. So hopefully get some follow-up from that. But yeah, let's get your questions in. We'll do a little around the horn while those are coming in and play this video. We'll be right back in 14 seconds. All right. Welcome to Ask Me Anything, our weekly show where we answer all your questions around the infinite banking concept, becoming your own banker, and really anything financial investing related. Anything we're legally allowed to say. I will give a quick little disclaimer that we are not licensed advisors or CPAs. So a lot of this is just our firsthand experience and sharing things that we do in our lives, as well as help other clients with. Now, we are experts and licensed for the infinite banking concept, so we can get very detailed and specific with that for sure. But I'm Stephen Nagy, so down here in South Florida, holding down the fort this week along with Shauna and the rest of the team. While most of the team is out in Whistler, Canada, Whistler, BC, and the other half of the team is at the SML headquarters at a little training. So everybody's out this week, but been some pretty good shows so far. Had a little Take Back Control Tuesday webinar yesterday. It was a lot of fun. What the F this morning, wealth webinar, and here we are now with AMA. So that said, get your questions over in the comments. We're going to answer all those questions. And while we're waiting for those to come in, we'll do a quick little around the horn to introduce you to today's money mentors. So Brian, you're out there in Whistler. Tell us, man, what's going on with One America? You're with the whole crew out there. What's going on?
Yeah, it's a blast. So yeah, I'm up here in Whistler with a lot of our team members, and also, of course, representative from One America Financial, one of our main companies we work with. But beautiful up here, beautiful weather. Been having a blast. We've obviously meeting a lot of people, but doing a lot of fun stuff. And my wife and I just got back from we're doing some ATVs up in the mountains and stuff. Some people went zip lining, some people went whitewater rafting. So a lot of fun up here. Weather is actually gorgeous, so it's a lot of fun. We're going to go out and have a fun time today as well. And I see some. So I see Drew in the comments here says greetings from Toronto. So you're up in Canada as well right now, Drew. That's awesome. And then Shane says hello from Lacey, Washington. Well, actually, Lacey, of course, is where I'm from. So I have family members that live all through Lacey. That's where I was actually born in Lacey, Washington. So it's kind of funny that you're there, Shane. So it's kind of cool. But yeah, so take a break and hop on and ask me anything. So with that, I'll pass it over to Miss Shauna.
Can you hear me?
Nope.
No?
Yes.
Okay. Well, my computer's like really glitchy, so I don't know if my internet's bad right now. But I missed you guys. It's been a few weeks since I've been on Ask Me Anything, and it's honestly my favorite hour of the week. It's super fun to be here, so I've missed you. And 2 weeks ago, I was looking at and secured the location for the Orlando PMC Money Tank. So if you have any questions about Money Tank, put them in the chat too, and we can get to that later. But I'll pass it to Joe.
I'm Joe. I'm in Buffalo, New York. Been in real estate since 2000, utilizing velocity banking and HELOCs since 2010. Started implementing IBC in 2019, and I use HELOCs and the IBC to grow my wealth. Put in your questions, and we'll answer them as we go. And off to Bree.
Hello, I am Bree up here, finally enjoying the sun in Alaska. Excuse the list, but I wear the Invisalign trays for the next 30 weeks. So you're going to have to bear with me, just like I have to deal with it. So I started IBC and was able to take back control of my finances back in 2022. And have implemented the HELOC, which has only leveled up my wealth building here since the beginning of this year. So I'm Joe's partner, and we're really looking forward to answering all your guys' questions. So start putting them in the chat.
I love it. I think we only have like 2 so far, so definitely get them in there. But SBB is saying, did you do your first lending deal on your own or with a partner?
I
I'm
did
assuming
mine on my own.
Real estate lending?
First
What kind of
deal.
lending?
Or what was it? Like if you like, I'm assuming they're like most of our audience, which is not a lender yet, learns what it is and then wants to be one. So maybe what's my first lending experience was on a forklift, and it was by myself, but it was a low amount. It was around 25 grand. But that was my experience.
I would say most it's usually on your own in most cases, or you have a mentor that's guiding you. Partner somebody, which means you're pooling your money together. You can do that, of course. Just got to be careful with that, because when you're working with somebody else, you also have to trust that person. Your risk is kind of spread a little bit. I've never went with somebody else before.
No, I only started my first level of lending this year, and I was blessed because I have Joe. So
Yeah.
I'm in good hands.
Yeah.
I did mine on my own.
I would say, where would you ever do a partner with lending? I would say, in real estate is where you might find that, where you're like, if I'm a borrower, so I've done this before on real estate. I borrowed from a hard money lender, and I borrowed from a private lender, and I think maybe another private person. So on a deal, I had more than one lender, but they were not partnered together. The other way I've seen it done before is where someone says, hey, I want to invest as a private lender on real estate, but I only have, let's say, $30,000, but they require 50. So maybe you get a partner or a family or a friend who has 20,000. You guys go together through an LLC, and then you lend $50,000 on a deal and split the profits accordingly. That would be kind of a way to kind of level up your ability to get into a larger deal. So, but obviously, go talk to an attorney about that and make sure you do it the legal way, all that kind of stuff.
All right. Anyone else? Steven, you good? Just your firsthand experience. I've done 4 deals, all of my so far, and all of them have been on my own.
There you
go. Okay. And then Dave is saying, I have 27,000 left in my HELOC. How best should I use it? Some tailored IBC product, or how exactly do I go about doing that?
What did you use the rest of the HELOC for? Did we pay off debt? If we paid off debt, where is the cash flow? The cash flow should be coming back into the HELOC. Are we utilizing it as a one-pot system? Where is your paycheck going? Is that going into the HELOC? I guess
you already have an IBC policy, and if not, and including all of Joe's information, then yeah, we would probably be looking at how best to capture that money. Because now that it's in your HELOC, that's great. Whatever you still owe on the HELOC, you're paying that interest, that simple interest on that owed balance. But you need to be able to put that money to work. You should also capture that money to make sure that it's forever benefiting you. I personally, when I opened up my HELOC, I got my next IBC policy and captured my annual premium and a dump into that policy and ran the money through, put it back into the HELOC. So now it's working for me in the policy. And I know that it's benefiting me being back in the HELOC, but I'm also going, and deploying that to be in opportunities to produce income that goes back into the HELOC.
This is where you would utilize leverage and arbitrage. So you would use the 27K left, borrow it from the bank at 8%, put it into something that profits you more than that 8%, 12, 15. Now you take that arbitrage and it comes back into the HELOC. So now you're utilizing leverage and spread.
And the other way just to kind of generally answer this question, Dave, is whatever helps you achieve the goals that you want to achieve. What are you trying to accomplish with the 27,000? Is it, that's what I would ask you first, is what are we trying to accomplish? And then whatever strategy aligns with that, then that's what you can do.
But if you don't have a use for it, Joe would say put it to something that gives you money back, cash flow.
Well, we want to make sure those boxes are actually checked. Sometimes we like to be our own best advocate, but we also have delusions of grandeur, and we might give ourselves the wrong information. Just confirming. I've had it happen multiple times just this week, right, Joe, where we're like being told maybe someone's paycheck to paycheck, but then we go through their expenses and we're like, that's $4,000 income coming in that there's no bills for that. Where is it going? So sometimes we have to face some hard truths, and it helps having a conversation with somebody to make sure we're going down those points and finding out, oh, am I being efficient in the right ways? And yes, like Brian said, we have to know, are we achieving what the goals are? What are we wanting to do with that money? And I think it's important to always be working towards improving your stance towards being financially independent, where your passive income's greater than your savings, your expenses, and taxes. So we always need to be keeping that money in motion so that the velocity is allowing us to make more money. And we need to be capturing it into the proper places and utilizing the right vehicles so that it's multiplying more times. We can keep that dollar bouncing and transferring within our financial sphere up to the average 7 times that the wealthy utilize the dollar for, versus the one time that it transfers in a financial sphere of the average middle class American. So,
well, the other thing also I'd ask you is, like, do you have emergency reserves? Do you have money set aside for emergencies? 3 to 6 months, usually, in most cases, or more if possible. If you don't have that, then I would make sure that you maintain some of that liquid somewhere. So, just as a suggestion. So, all those kind of things to consider.
6 months is my favorite starting point for that.
But if you didn't have an IBC policy, you could utilize that, put it in the policy, and that could be as reserves there too.
Mm-hmm.
Really good. So SB, who asked us, what everybody's first lending experience was like, put a bunch of questions kind of after that.
Yeah.
So asking, one, were they people that you knew that you lended to on your first deals? And then if you lend to a business name, do you also do a background check on the person, and do you confirm bank balances on the person or the business, or both?
I mean, honestly, it's real estate. So it's so versatile. It's really up to you. But the more certain you can be about the person you're giving the money to, the more likely you are to be successful with the lending. So you can do all that kind of stuff. I mean, sometimes the person that you're lending to might not want to provide that. So that's up to you whether you want to work with them or not. But yeah, I mean, you can do all that kind of stuff. I mean, hard money lenders do. They'll do a check on you. They'll confirm your bank and cash available. They'll confirm all that kind of stuff. So, I mean, bottom line is just do what the hard money lenders do. They verify all that kind of stuff. That'd be kind of my thing. And then, were they with people you knew? I mean, I've borrowed money, and it was from people I generally knew in the industry. They weren't like close friends or family, but they were people in the industry that I knew that had a reputation.
I will say, not to I feel like I'm always talking up Money Tank, but everybody that I've ever done a deal with, I have met in person, and usually at a Money Tank. Like, I met Kendrick at a Money Tank, and I met Arthur in person, and then Ark I was able to meet in person here, but through a webinar. So, and not that meeting somebody in person doesn't mean that your deal is not going to go south either, but it is just that's my track history, is I've at least seen them in person.
Well, that's because you're a responsible banker, and you not only invest in things you know, like, and understand, but you invest because of the fourth leg, which is you trust.
Yes. So more follow-up questions too. So if the borrower has their own attorney for closing, do you also use your attorney to do all the lending paperwork and money transfers? Sometimes, I guess.
Another thing too is to protect yourself. When you lend the money, you could lend it right to the title company, or you could put it right into, to the lawyer's escrow. So you wouldn't be running it through that LLC, and that lawyer would take account for your money, and you would know that, that it would be filed accordingly too.
It depends on your level of experience as well. So a lot of people, when they're first getting going, will have an attorney involved to set up the paperwork and do all the documents, that kind of stuff. And then once you understand the process and all that, you might not need them anymore because you already have the contracts and the paperwork. However it works, but there's going to be a closing. So you ought to make sure that when there's a closing that you're in lien position, that it's all filed on the title correctly so that you're secured via the asset. That's the stuff you got to make sure of. And it does not require an attorney to do that per se, depending on the state, by the way, state specific. A title company typically can do it, but in some states it does require an attorney. But just got to make sure you understand the overall process and make sure that it's all the I's are dotted, the T's are crossed, or whatever they say.
Whoop. Sorry, my phone's ringing. And then, so many people who do flips don't have the well or septic inspected. How do you handle those, like from, I guess, the lender perspective for flips if the person is doing the rehab doesn't inspect those? And then I'm just going to throw in another question in there too. And then when lending, instead of points, why not just use a rate and a minimum guarantee?
So go to that first one. So, I mean, that's really up to the person. Go to that first one. What was it?
Steven's fighting me over
So
these.
it's up to the person. Oh yeah, there
I
you go.
too like to play Russian roulette, I guess. Like,
Yeah.
oh
But I mean, it's up to the lender can require that. So if you're private lending on a deal, you can request and require it. It's also up to the investor who's buying the property as well. But I mean, I definitely do recommend trying to inspect the septic.
always do a proper inspection before looking into investing in any type of property.
Yeah.
That's coming from a property inspector that has seen too much lipstick slapped onto pigs that would kill somebody. So,
well, I've bought properties and not done an inspection on the septic though. I've done it before, not done it because they had documentation of when it was last inspected. If it's done, if it's within the last,
that might change. Yeah, that helps.
Within the last 3 years, most cases, I wouldn't bother having it inspected if I was going to buy it for a rehab because I'm going to do it anyways on my own. You have to when you sell it traditionally, but when you're using a hard money, sometimes the hard money lenders will require you to do it. So, but a lot of times, I've bought a house within 24 hours. So we made an offer and we actually acquired it within 24 hours and funded it that like right away. I mean, it was the fastest thing I've ever done before, but we didn't expect it because they had records of it being, it was pumped 2 years ago. So it just depends. It's situational.
You must live somewhere where people keep records. That's
well, they had the paperwork.
Yeah, no.
Yeah.
People are really bad about that up here. It was a huge problem as a property inspector. I'm like, when was this last inspected for the HVAC? And we're like,
oh yeah.
So.
I mean, I don't know, Joe. Do you ever deal with this kind of stuff with minimum guarantees?
If it comes in like 6 months or a guarantee of 10,000, let's say if you're getting $1,000 a month and you're putting in 100,000 at 12% with a guarantee of 6 months at least, because maybe they'll flip it in 3, maybe they'll flip it in 8, but you could have the minimum guarantee of you could set that standard if you're the lender.
Well, I was the borrower and I borrowed money one time from somebody and I said, okay, we're not doing points up front. So by the way, when we say points, everybody, if you know what they're talking about, it's like an origination fee. So like you do like a $100,000 loan, it's 2 points, which is 2% of that up front, and then a certain percentage of the loan over per month. So I did it with no points, so there was no upfront to them, but there's a minimum of 3 months of interest. So it went for 4 months, but if it had gone for 2 months, I still would have had to pay 3 months worth of interest to that lender. So it's just whatever makes the most sense between you and the lender or borrower. I've done both.
The part is, if you're the bank, that usually puts you in a little bit more of an advantage point too. So.
And then just trying to get through a lot of these questions from SB, but assuming your attorneys do the closing with the title company, do you have the lender also pay the attorney and title fees?
Negotiate?
I guess probably it's all different probably, right?
Well, it depends on the borrower. So if you're the borrower and you're going to have to, I mean, there's sellers and there's buyers, and so you negotiate sometimes on who's paying the closing fees and all that. Sometimes it's split, sometimes it's not. I've done it every single way I can think of.
It's
Probably.
different in different states too, like
Yeah.
in different counties actually. So here, like Martin County and Palm Beach County are different.
Yeah. So like when I did it, let's say I'm the borrower and I'm borrowing the funds and I don't want to pay anything out of pocket and I have to pay a bunch of closing costs. I'll roll it into the loan that the lender is giving me. You know, I mean, it's not really, the lender's not really going to dictate that per se. Usually it's the buyer and seller are going to dictate that. And there you go.
I love it. And then Steven, I'll pass this one to you since you loved this comment so much.
Yeah.
Brent saying this person should take Noah's class. You want to tell SB what PMC has or what we have available for something like all those questions?
I mean, so we do have through Private Money Club, we do have an 8-week coaching program for teaching private money lending and borrowing. And it's combined because what a lender needs to understand, the borrower needs to know, and what the borrower needs to understand, the lender needs to know. So we have borrowers and lenders in there. So it's really cool too, because they start to get to know each other over the 8 weeks and build relationships. A lot of deals get done through the class. But on the borrower side, you kind of learn some of the important documents, what lenders are looking for, how to present it, how to build a presentation, you know, what to do to get that money. And then on the lender side, you know, what to look for, what questions to ask, how to negotiate, all that. But it's taught by Noah Harris, and he does a great job with it. It's 4 weeks of twice a week Zooms, and then 4 weeks of supports to help you get your first deal done. And it's a really cool program. And if you need private money, either to borrow or lend on deals, you know, highly suggest a Premier membership through Private Money Club. And we have a really cool special going right now, which is a Premier membership, an annual Premier membership with the 8-week accelerator coaching program for a pretty significant discount. So if you want to really dig in and learn this stuff the right way, which is what I'd recommend, just shoot me an email. It's snagy@privatemoneyclub.com, snagy@privatemoneyclub.com, and I can kind of get you more details.
I'll add something too, Steven, that I learned is one, Noah's class is like tapped out around 20 people too. And then it's set up as, I believe, a Zoom meeting. So actually you could have your cameras on and you get to like meet it's just a really good way to also jumpstart like how to deal with Private Money Club, because you're joining with 20 other people. You can go to Private Money Club right now for free and set up an account, but you're not going to know 20 people enough to like really give you the time of day. So it's a really good incubator type thing. And I know a lot of good relationships started off like from being in like a cohort together. And then a couple questions too is like all about the same stuff. I know you put your email in there, Steven, but you know, Steve says he's doing the class right now with Noah, and it's awesome.
Cool.
And how often do these meetings happen?
Well, the meetings in the class are twice a week for 4 weeks. With a Premier membership, you also then have the ability to present every Monday on Money Club Mondays and raise money, present your deals, opportunities. It's where the lenders come to find new deals. And then we do a once a month 2-hour mastermind call with Premier members only. So once a week for Premier members, and then once a month for Premier members as well.
Yeah. And I think Noah's able to get about 6 of those cohorts in a calendar year. So it's that 8 weeks kind of, we get 6 of them in there in the year. I think he takes like a week or 2 off between. But yeah.
Yep.
And then Brent saying that class rocks, you'll know everything. And then I don't know if we want to address how much is the class, which I think it's a steal, but
it's $2,997 by itself.
Cool. All right. And then just a couple more questions. We can change subjects now, but Kiona is saying, what is syndication?
I'll take that one, Joe.
I was going to say, Joe, what do you think of that word?
It's when people pool their money together and purchase a multi-unit hotel or a multi-unit, and usually you won't get any money back for a certain amount of time, promised equity or part of the proceeds that come to fruition after said year, 2 years, 3 years. And sometimes in that time, something doesn't happen to the building or something happens to the money, and there could be a problem with the money that comes out in the end. I've had a problem with that once, and it just depends on what is backing it. And usually you're part of a partnership, and it's not really a asset based lending as we kind of promote more and more.
Yeah, it's not really collateralized. So there's the general partners who are the ones that are in charge, that are running the show, managing the projects, raising the money, all that stuff. And then you have your limited partners who are basically the private money lenders. And the problem is that with the limited partners, the private lenders, is they really have no control over what's going on. So you're really relying on the general partners to do it right. And like Joe said, we see a lot with these syndications. They end up costing a lot more than they're expected, and markets change because usually they're larger projects. And so if they get to a point where they need more money, they do what's called like a money call. Like they'll call on it, and they'll basically, as a limited partner, you're required to either put more money in or drastically dilute your ownership share within it. And so we've just seen a lot of those kind of go array lately. So if you're looking at a syndication, I mean, my personal opinion, just be very, very cautious, very wary, do a lot of due diligence on the general partners and their experience and the project itself to make sure it's going to fit. I mean, we've seen a lot of syndications over the last year that have gone bad because everybody started building. Chris just put a video out, I'll share the link in a second, about affordable housing in this country, but everybody started building these projects and there's just no demand for them right now. And so it's really starting to become an issue for sure, but just be very cautious right now, especially in this market we're in and going into right now.
Okay. And then Kiona's also asking, how do I get started with whole life insurance through BYOB?
Yeah, so I put the ticker at the bottom. So, and we'll put the link in the comments here in a second to schedule a call with one of our team members.
Perfect. Okay. And then Evelyn is saying, I had some questions regarding estate planning. I am in the process of creating a trust, and a dynasty trust was suggested by my lawyer. Any advice?
Talk to an attorney.
Make sure your decision today is going to be the decision that you're going to stay with for not 5 years or 10 years, but for a long 20 years or the rest of your life, especially if you're deciding to do an irrevocable trust opposed to a revocable trust. As things progress in your life, maybe today you deciding on doing what you're doing might change 4 years or 5 years down the road, and then you'll have to spend more time and effort of trying to unwind what you wound before.
I'll add one thing to that. I've been doing this long enough now where I've seen our clients and students get ripped off by some of these larger estate planning organizations and firms out there. And when I say ripped off, I'm not saying it's bad what they have and what they recommend. Like maybe a dynasty trust is perfect for your situation without knowing your financial situation and what your goals are. I couldn't tell you that right now. But I've seen a lot of this stuff where they recommend stuff that costs way more or is way ahead of when they actually need it. And so you're spending a lot of money on something that you have no need for right now. But I've seen this happen over and over again. So my recommendation would be to get a second, a third opinion. Make sure that they're really looking at what you're trying to accomplish, like Joe said, in the future, but can you do it later and when you spare the expense today while you're still building, things of that nature. So we do have trusted partners that do estate planning, that I personally use, and Chris does, and a lot of people on the team do, that we trust. So if you would like a referral, I'm happy to send you their information. If you want to send me an email, I'll connect you. So it's snaggy@chrisnoggle.com or whatever email you have for me.
Yeah. I mean, dynasty trusts, those are not just this generation, they're generational. Those are like thinking 2, 3, 4 generations down the road. So you got to kind of have it dialed. And those are typically irrevocable, if I remember correctly, too. So,
And they're usually expensive, and they're made for like
Yeah.
huge estates, So, if you're a very, very high net worth individual, it might be right. If not, you might just be getting sold something. That's what I'm trying. That's what I'll say nicely, Brian.
yeah, exactly. And believe me, we've come across that recently too. People getting sold something they don't need.
Yeah.
Okay. Knights of Israel is saying, where do you guys look for investing opportunities in addition to PMC?
That's an open-ended question. I mean, honestly, that just depends. It depends on what kind of strategy you're looking for. You could be part of investment groups. You can be part of masterminds that are investment focused. I mean, you can do real estate locally. I mean, it really just depends on what you want to get into. But regardless of what you're trying to do, look for opportunities that you like, you understand, you trust, or ones you want to learn about. That's where I would start. There's opportunities everywhere out there. People will love to take your money, by the way. But you should look at, if you are interested in doing a certain strategy, learn about it, understand how it works, get into it. Because if you don't have the knowledge about it in a strategy, don't do it, in my opinion. You've got to understand how it works. But yeah, Joe, I know you do a lot of investing. What would you say to that if you didn't have any opportunities in front of you right now?
Depends, like you said, different groups or different people that you come across. Different people in business will bring you different deals. It just depends on your network and who you surround yourself with, more or less.
Yeah. And Brent asked a question here: why would you look outside a private money club? Well,
I actually have never looked outside. I didn't want to. I keep feeling like I'm hyping up Private Money Club too much, but I've only lent to Private Money Club people.
Keep in mind, you might want to do buy and hold real estate. Well, that might not be inside Private Money Club. Private Money Club is made for borrowing and lending. But what if you want to have hard assets? What if you want to own for long term? I mean, there's lots of reasons why you might go outside Private Money Club. Like for me, I would do like subject to investing. I understand subject to strategies, but you're not going to find that inside Private Money Club. You're going to find that actually on your own. That's another finance strategy.
There's enough deals inside of PMC to keep you happy for a while.
Yeah.
And then Ethan's saying, hey, team and Campfire, looking forward to being back in a few weeks. Great discussion here. So Ethan's been bringing, I think, great answers to AMA recently. So shout out, Ethan.
He's on 2 weeks of training. National Guard, right? Is that what he's in? National Guard?
I think
2 weeks of National Guard right now.
Nice.
He'll be back. Oh, he's on here. I thought
I
you said somebody else was giving Ethan a shout out. Yeah, there we go.
Lucy saying, as a newbie, I highly recommend PMC. So that's great. And then Kiona saying, what is PMC?
PMC's Private Money Club. It's the place where the cool kids hang out.
Yeah.
It really is. I mean, I don't know how else to tell you. Here, I can show you.
Yeah, and while you show that, basically, a lot of us were learning about infinite banking for years and years. And then, it's like theory until it becomes reality. And that's where Private Money Club came in. It came in after to make it all real.
Yep. Education, community, deals, coaching we're over 8,000. We got to fix this, Shauna.
Yeah, it's 8,500 now.
Oh, my favorite ad.
Mm-hmm. The lasers. Steven thinks it's so 80s.
We are redoing this whole page right now. Yeah. So with a free membership, you can sign up as a free member. Just hit sign up, free membership. Make sure you have a good bio, but you can go ahead and play around. You can communicate in the community. We like to say a free membership gets you in, a premier membership gets you funded. So when you're ready, with a premier membership, you also get loaded up with 20,000 bonus points, which allows you to take the certification courses, which are also very good. These are going to be more the foundation of lending, where Noah's coaching is more coaching. It's more actual how to and what to do. This is kind of the basics of it all right here, but very, very important, because remember, when you invest in anything, you want to know, like, and understand it. And so it's important you get educated before you dive into this stuff. But yeah, I mean, there's deals for days. New deals posted on here almost every single day. Whoa, Christy Vance posting something.
Huh.
Nice.
Cool. I didn't know that.
I think that's all of our questions at the moment, too. So
Look at that.
I have a question I'll ask once we come back.
Yeah.
Go for it.
I have a question. So this came in from a client. I want to get everybody else's input on this one. So they're asking about the interest rate or the interest on the policy loans. How is that interest applied to the policy loan? Is it upfront? Is it added on? Is it added to the loan balance? Is it an invoice? They're asking, and when does it occur? They're asking that question about the interest. So anybody want to answer that question?
I can say just from my first week of having my first policy, when I took my first loan, I requested a specific amount, and I immediately notated after I had requested the specific loan amount that it was showing me that the balance that was owed on, or the principal loan, was actually higher, and that the available cash value had gone down by that same balance. So when you initially take the loan, they take that first year of the interest rate and allocate that from the cash value as part of the loan. And then when I paid back the loan in month 2, it reversed most of the interest. I paid 50 cents for my first loan in interest, and they reversed the rest of the interest rate, and the cash value was available. So
to answer that question, so to clarify, nobody knows didn't understand that. In some companies, when let's say you borrow $10,000 and the annualized simple interest rate is 5%, the loan balance would be $10,500 immediately.
Mhm.
So they apply the interest to the loan balance right away. So if you have $10,000 and you want to borrow $10,000, you can't borrow full $10,000. You can borrow approximately 95% of the available cash value.
correct.
That's like One America, by the way. That's how they do it. Lafayette does it a bit different. So if you borrow $10,000, your loan balance is $10,000. At the end of the policy year, they send you an invoice for the interest, which you can then put into the policy loan if you want. But theirs is at the end of the year. One America is at the beginning of the year. Every company is slightly different.
Yeah. And I will say, from when I was, it seems when I would go and take loans from the Lafayette policy, that they would show a certain amount available. When you go in to take the loan, they would say you can't go over this amount, because it seems like they're trying to allocate what would be taken from cash value if you didn't make that interest payment.
Correct. So like that's why we always say, whenever you hear us say, how much cash value will I have? I always say approximately this much, because there's math behind it, and it's not an exact 90%, exact 95%. It's not exact. It's a slightly fluctuated number based upon the current interest rate. But generally speaking, it's, what we say, but there is some fluctuation. So, but that's a good question, because I've had people ask that, and we try to explain, hey, if we're going to this company, this is the way they apply the interest. With this company, it's this way. So like I had a client recently last week call me and say, hey, I just got an invoice for the interest. What do I do? I thought it was added to the balance. Like, well, you can pay it out of cash. You can actually borrow from the policy to pay the interest, which puts it into your policy balance. Lots of ways to do it.
Mm. And the faster you pay back the loans, though, you'll be changing that interest rate, because you're not paying annual now. You're paying a portion of the year. So I got it down 1 to 3%.
Yeah, and how you pay the loan interest depends on your strategy and what you're doing with the loan itself. So if you have that loan out there working for you, and it's just going from one deal to the next deal to the next deal, and you never pay the loan back, by all means, pay the interest on the loan so it doesn't accumulate, is our suggestion. So if you have profits coming in, like Joe does, he has profits from investments, he takes a portion of that to pay the interest on the loans every policy year or however.
Yeah.
So, but
Always focus on arbitrage.
Yeah.
Always
And we
pay
can
the
walk you
interest.
through that. Yeah.
If you always pay the interest, then you're going to receive all the dividends, and that goes right back in to purchase more cash value and to increase the death benefit.
Yeah. But that's what we're here to do. Our team is here to help you with those kind of questions and make sure you understand that and do it correctly. Because I've had clients have other policies with other people, and they're not doing it correctly, and we have to sort of reverse and kind of unwind what they've done with the policy loans, and then get them straightened out on how to do it correctly.
I love it. 3 weeks ago too, we did a Wealth Wednesday webinar, which we do live every Wednesday on Zoom, and it was titled "How Infinite Banking Policy Loans and Interest Really Work," and I put the link It's on Chris's YouTube channel. So that might be something good to watch too, to understand that more.
I'm curious about SBs. Yeah.
Yeah. SB saying, when you did your first loan, did you have enough money to fund the property plus the flip and get first lien? I have about 70 to 80,000 to get started, but it's been recommended to not have second lien, although it seems there are enough protections and due diligence to safely do a second lien bridge loan for a flip.
I mean, it depends on who's in first lien position, in my opinion. So, I mean,
it's all risk and reward. I mean, you're definitely taking on more risk because you kind of lose the collateral. You're depending on who that first position is. So like Brian said, I mean, it does matter who the first position is, but more importantly, it matters what those numbers are. So how much equity is left over, if things do get bad, to get your money back. So you really want to be careful. I know, for example, Chris Noggle will never lend in second position. That's his prerogative, his strategy. A lot of people do lend in second position, and one of the advantages of second position, I guess, is you typically get a much higher return because it's always risk return. And so you just want to kind of ask those questions, make sure you're safe there and it's good. It kind of depends on the amounts. And then the other thing I see a lot on Private Money Club is, let's say somebody needs 140 grand for a deal. Well, you have 70, somebody else has 70. They both go on in first position. Now it doesn't work that way in every state, but most states allow that. And a lot of more experienced borrowers put deals together that way. And so both people can be in first position proportionately. And that seems to work out really well sometimes also. I did that there are 70K. There are first lien deals, to Brent's points down there. There's a lot of 70K first position deals on PMC also.
I did a deal like that one time where this acquaintance of mine, I had an LLC sitting over here on a shelf. And they wanted to do a deal together like that, combine it. And so I just added that person to the LLC, and then we both funded the LLC, and then the LLC funded the project. So we were in first lien position. Yeah, that's one way that you can do it. Stay specific. Yeah, that's another one. Yeah, but I've had people that I've borrowed from. They lent me money. I put them in second position. The first position was a hard money lender, and I was paying them 12%. The second position person, I paid them 20%. So risk and reward, they were getting more money, more interest on their loan to me because they were in second position. And I was glad to pay 20% because I was able to do two projects instead of one. And I made a lot of money on it.
Yeah, just because I saw this one. So Josiah presented on Monday, on Money Club Monday. So again, join us on Mondays to see these deals and how people are doing it. But this was a really good one. And you needed 85,000. So it's a little more than I think you said you have. But just as an example, just because I saw it on Monday, again, this is not my suggesting or advice, but this was a really good deal from what I saw of it. Really, kind of low risk type deal. So there's a lot of them on there in that range, though.
Yeah, and just a disclaimer is we're not allowed to tell you which ones to do. So,
right.
So,
but safe here. So yeah.
Regardless if we screen share it or whatever, we are not endorsing it by any means.
Yeah, so SB, we don't facilitate those joint private lending type deals, but people do it every day on there. So absolutely.
That's the dating site for borrowers and lenders. So all we can do is give knowledge and maybe you
exactly.
That's a good question, Lee.
Did you
paying it with the interest?
What happens is it's just you get the same dividends. It's just that the dividends are eaten up by the other interest. So when the dividends come in at the end of the policy year and they come in as cash value, but if you have interest loan being added to the loan balance, they kind of equal each other out, and then you have nothing left to borrow against. So yeah. So I mean, it makes sense to pay the interest back, but I mean, if the dividends come in and you were going to pay the interest with the policy loan, don't do that, and it's the same thing.
And then Lucy just said, I have a whole life with One America and Lafayette, and One America allowed her to pay additional PUA to max her cash value, but Lafayette said no, and I only paid the base and PUA premiums into Lafayette. Why would they say this?
It sounds like One America might have been built a little differently than the Lafayette.
Well, Lucy, I'd have to look at your policies because I obviously know Lucy. So they're maybe doing the same thing, but just saying it differently. Because One America has a thing where your PUAs after year one is 3 times your base. Lafayette is however it was built. So Lafayette can actually be more than 3 times your base, by the way. Sometimes they can be higher.
Yeah.
So it just depends. So Lafayette, you'd have to look at what the PUA is versus the base. But sometimes Lafayette, by the way, down the road, Lafayette does sometimes allow you to put more PUAs in. It just depends on the MEC calculation, which is the modified endowment contract at that point in time down the road. Same with One America, by the way. They can sometimes allow you to put in a bit more PUAs if the MEC limit changes.
Depends on if there's a dump too.
Correct. Yeah. So we just look at your policies individually and see what they meant or what you were asking.
I only say that because when Joe builds the illustrations for our clients, he'll go right up to kind of like that maximum death benefit that they're allotted, or, you know, basing it off of the maximum of the income. And so that's all the PUA room that they're going to be able to get for the policy. And so sometimes, yeah, I know the one he built me, I can't put in more PUA except my, you know, first year dump of PUA.
Each company has a max PUA you can put in on the premium side.
Yeah.
Depends on if there's term, depends on how close it is to the MEC line. There's a whole bunch of different reasons.
Yeah, age of the policy, all that stuff.
Yeah.
If you, I always recommend though, when you are, you know, trying to get the money into the policies, make sure that they're efficient too, so that you're saving that little bit on the cost of the monthly premium versus annual. So that's always my first goal, is getting my policy, if I started on monthly, getting it to an annual premium. And if there's any PUA room, putting it all in. And if I know I've stuffed that, awesome. I've leveled up gold star right above the head. Now we're going on and we're ready for the next policy, because money for days.
Very good.
No questions right now. So we're good.
Well, there's
Anything?
So SB says, do members of PMC do joint private lending deals? You can if you know who they are. I mean, you can always reach out to a lender and say, hey, would you want to do a joint? I mean, keep in mind, I mean, in this space, it's pretty much, I mean, the answer is sure. If you can find the private person, yeah.
Yeah, it's all self managed. So realistically, if you find someone.
You see a lot of that happen at Money Tank. So at Money Tank, because you're in person with each other. And so you really build those relationships. And you see a lot of people leave Money Tank and start doing deals and things together, which is really cool.
I know every time I event, my Facebook gets flooded with pictures of all your faces together.
Yeah, I haven't done it yet, but actually Ruth, since the last Money Tank, Ruth called me and she asked me if I wanted to do a deal with her for one of the other members' deals. I wasn't able to, but like that's the kind of calls that you might get from being at a Money Tank, is saying, hey, I know you know Tish, I know Tish, do you want to do like a deal together? And then you can or you can't.
Sure.
And our next Money Tank is in November 7th and 8th. It's a Friday, Saturday. We're working on the landing pages and we'll be selling tickets to that in the next 2 weeks, I'd say. So email us too if you're interested in that, because we'll send you the link as soon as it's ready.
No more questions?
No, not yet. My phone's just ringing off the hook.
Going once, going twice. No questions. Well, cool. Well, I have to go enjoy some more Whistler here.
Awesome.
What for me?
I have a policy, and on the annual statement, it does list PUA limit before hitting a MEC. Does that change annually?
It can, depending on the company and stuff. Yeah, it typically never goes down per se, based on how it's built, but it can sometimes have a bit more room because the MEC does kind of change a bit, but it can't go down, but it can go up to you sometimes. So I've heard. I've never seen it online.
I have Security Mutual Life, and when I go to pay, it's quarterly, but when I go to pay it, it'll tell me like pay, you know, the billed amount or whatever, the normal amount, or pay max or pay minimum. It's cool. It's got like 3 little bubbles and I can pick which one I feel like doing.
Cool.
I don't know. Did Lafayette get their site working for COLI policies yet? Does anyone know that?
That's a really good question. Banging my head against the wall because of it. He's got all kinds of COLI policies. Man's got just out the wazoo COLI policies, and yeah, you need to make sure the policy.
Not yet, Brent. It's going to be done. I'm told very, very soon, though. So very soon with an insurance company, probably next couple months.
A dog with a bone.
All right. Well, that's it. Steven, I don't know if you want to close her out.
Yeah, man. All I got to say is go Panthers. Go Cats. We're going to take another Stanley Cup home, back-to-back, baby. I'll be at the game tomorrow night, so look for me on TV. I'll be hanging off the side of the Corona Club, front row, second level right there, behind the Panthers goal, and having a good time. So that's all I got.
Very nice.
Awesome.
I'm pumped. But, yeah, thanks, everybody, for being here. Appreciate you. Thank you, Brian, Joe, Bree, Shauna. You guys are the best. Hopefully our team out in Whistler and up at the SML headquarters are all having a great time today as well. But we will see you guys tomorrow on the PMC Quick Start webinar. For those of you who want to learn more about real estate, do that every single Thursday. For everybody else, we'll be back next Wednesday for all the shows next week. Everything going on. Have a great summer. And anything else? That's it. We're out. Peace.